Hello, fellow truthers. I'm David Ravel, and this is ValueSide for Tuesday, March 22nd. For all of our articles and podcasts, visit valueside.com. Today, where are the indicators leading? Well, one of the research reports that I like to check in on at this time of the month is the latest edition of the Leading Economic Indicators, the LEI. The LEI sets the tone for the overall direction of the economy and is used primarily by those on Wall Street who are on the money management side of the business, the so-called buy side. What buy-side analysts are looking for is an overall framework from which to make their investment recommendations. A major fund, for instance, doesn't want to be caught investing in a whole bunch of highly speculative growth stocks just as the economy is headed into a recession. Better to be in bonds or defensive equities. And the LEI gives that kind of perspective. It's an overall 30,000-foot observation of where this country is headed economically. Now, in a normal world, being one who puts together these leading economic indicators is a fairly straightforward job. In fact, you could call it somewhat boring. You add up all your indicators, such as initial claims for unemployment, new orders, building permits, and so on, all the usual things that we talk about every day. Yesterday, incidentally, we had the newest of the indicators, the Chicago National Activity Index, and in its short history, this new index has gathered quite a following. It's now used on several of the computations of leading economic indicators. And like many of the other indicators, the signal from yesterday's Chicago Activity Index is frankly blah. Okay, it's not signaling that we're falling into a recession, at least not yet, but it's only marginally positive, indicating an economy that is just barely limping along. This is an index which, as recently as the first quarter of 2020, just before the pandemic struck, was reading at over 6. It's now reading at just half a point. Not negative, but I wouldn't want to bring that grade home to my parents. And overall, it's exactly where this month's leading indicators stand. Weak-kneed, tepid, barely positive. Now, of all the comments on the latest LEI, the most cogent comes from Adaman Azildirim, who does a great job of rattling off just what's ahead for all of us. First, says Adaman, comes the Russian incursion into Ukraine and the subsequent U.S. boycott. This will likely provide for a slowing in the supply chain, as if we needed that, rising prices for energy, food, and metals. Coupled, he says, with rising interest rates, labor shortage, and a high overall inflation. Oh, and don't forget the pandemic, with lower growth risk from Omicron and other COVID variants. Wow, what a collection of variables. It's a cornucopia of less than good news from the leading economic indicators. Now, the big economic news overnight and today has been the rollout of a new, more hawkish Federal Reserve. You can note that whenever the Fed wants to take a different direction, they line up the speakers and hit the podiums. Yesterday we had 3 speeches from Fed members, and 2 are scheduled for today. Heading the list yesterday was perhaps Chairman Powell's most hawkish stance ever. Taking the podium, Powell echoed Governor Bostich's sentiments earlier that a half a point bump in the Fed funds rate are on the table. Bottom line, the street now believes that the Fed could raise the Fed funds rate this year as many as 7 times. And if some of those hikes are at 50 basis points, that could take us very far afield from where we are today. So on the docket today are speeches by Fed Governors William and Mester. Also reporting today will be the Richmond Fed's Index on Manufacturing and Services. On the earnings calendar today, reporting so far has been Carnival Cruise Line, with the stock reacting positively. And then after markets close this afternoon, we'll get the latest results from Adobe Systems and health savings company Health Equity. And that's the Value Side on the Open for this Tuesday, March 22nd. For all of our podcasts and blog posts, visit valueside.com. I'm David Ravel. Value Side is independently written and researched. The views expressed are strictly my own.